So kia ora koutou. It's lovely to have so many of you with us for our evening session of our EHA Hui. It's great to have Tam with us from Auckland, who will take us through some financials and obligations on boards. We'll just start with a karakia to open us. Whakataka te hau ki te uru, whakataka te hau ki te tonga. Kia mā kina kina ki uta, kia mā taratara ki tai. He hiaki ana te atakura, he teo he huka, he hauhu, Tihei Māori ora. So thank you, Tam, for spending your evening with us and sharing all of your expertise and knowledge. I'll pass it over to you. You'll probably need to unmute yourself.
Yep, there we go. Can everybody hear me? Ooh.
Perfectly.
Right, okay. Kia ora. I'm Tam Alexander. I'm a not-for-profit specialist working with governance and operations. What we're doing this evening is a one-off, so this is not something I have timed before. I'm hoping it's going to fit around about the hour that we've got available. And to a great extent, I'm going to read some of what I've written just so that it sort of makes sense, if that's okay by everybody. I'll go through a little bit of process after this bit of introduction. Okay, so we have 1 hour in which to touch on a lot of ground, but what makes this quite scary for me is that you are a group of people with different levels of knowledge and experience and probably wanting quite different things from this session. So was really tricky, just knowing how do I pitch this and so on. So for those of you with more knowledge and experience, please forgive the necessity that we need to cater for participants who are fairly new and or finance beginners, fairly new to boards. The session is aimed primarily at board members, but it is also a good idea for managers and finance staff to understand what a board needs and what board members might be looking for. If I annoy you or bore some of you, welcome to the large club of people who I have previously annoyed. And you may throw rotten eggs at me if and when we meet. So I will try to make sure we don't meet in person after that invitation. Seriously though, there are many people who are not excited at all by finance or by boards. And I get this. Please do remember that finance is like oxygen for humans. It's vital, yes, but not necessarily interesting. Finance knowledge, however, even if it doesn't enthrall you, it can certainly empower you. And that is really the aim of this, for board members to be empowered. I'm not sure if there's a board equivalent of the oxygen analogy. There probably isn't. Now, Georgina did send around a paper earlier today that attempts to do two main things. Now, first of all, can I just have a show of hands? Did you receive this paper earlier today? Okay, great, at least some people. Okay, good. So that paper tries to do two main things. One is it makes some suggestions about how you can perform better in the EHA funding assessment. It also sort of helps you understand what EHA wants from you. And then secondly, it offers access to a whole bunch of reference material. So please check that out and feel free to ask for any of that reference material. So each section has got reference material as part of it. So for anyone needing more detail on anything that is covered this evening, please request copies of the reference material. I know you are all tired. That's not surprising. I think Zoom Hui is incredibly tiring. But this does mean that there's absolutely no need to take notes. You can get all the information subsequently with that reference stuff. Okay, regarding process, unless we miraculously finish earlier than expected, a friend of mine, sorry, just joined, Janet, hi. Unless we miraculously finish earlier than expected, there will not be a lot of time for questions during the session. So I do ask you, please either type any questions in the chat section, if you know how to do that or prefer to do that, or email them to me afterwards. Now, my email address is in that paper that was sent around earlier by Georgina, so that's not a problem. I will get back to you, all I would ask you is that if you can say if you want a personal reply or a group reply, because some people might have something specific to their organization. Having said that, if you do believe you have a question that needs to be dealt with during the session, please don't hesitate to raise your hand, or if I don't see that, just butt in. Okay, I'm used to people butting in. Okay, an agenda outline for the session. Going to cover a little bit about governance versus operations. Roles of the board, 3 primary areas, legal and compliance, which we'll just touch on, oversight and strategic planning. And then what is different about not-for-profit finance. And then finally, we'll actually go through some simulated board reports, and I'll talk about, if they were presented to me, what I would spot in there, and it's very good if you spot stuff as well. So what do we actually want to get out of these papers that come to us on the board? Okay, if that's all right, let's get cracking. First of all, roles of the board. In reality, boards of trusts and incorporated societies have quite different ultimate power. Obviously, trustees hold the power in a charitable trust. The members hold the power in an incorporated society. Having said that, in practice, they're going to be discussed interchangeably here. And the same goes for boards or committees, because some organizations just call their board a committee. It's a governance body, so that's what we're talking about. At a very broad distinction, governance is a generic term for the role of the board, while operations is a generic term for the role of employees, and particularly the most senior ones. And again, I like an analogy of a ship. If we've got a ship that we're all traveling on, the board basically decides where the ship is going. And then that's the end of their role effectively, and the operations team get us there. So if we think about it in terms of that, I think that's quite a convenient way of having that distinction. However, in reality, there's quite often blurring of that particular boundary, and that isn't unrealistic, because a lot of organizations are very small. They don't have operational staff with all the skills that might exist on the board. And so we do get blurring of boundaries. That's not an issue, but what we do need to do is to have solid policy and practice in place that makes that okay, that blurring of that boundary between the board and the operations. And I do think that is going to affect some of the organizations that are involved here this evening, because that needs to be a very clear and distinct distinction. Okay, another thing about the board, of course, the manager or CEO is the only staff member employed by the board, and in effect provides that link between staff and the board. I always find it an interesting question with not-for-profits is, who owns your organization? And I don't know if you've ever thought about that, but it is actually quite interesting, because it's sort of nobody really does, but yet there are assets and things that belong to somebody. So, that's quite a tricky one. The trustees and the board members really are the guardians of those assets and look after those things. In terms of duties and roles of a board, the 3 main ones, the first one is legal, where the board basically has a number of legal duties, has responsibilities, and needs to deal with compliance issues. Now, in 2019, the Trusts Act was revised, and there were some quite significant changes that particularly charitable trusts need to deal with and look at. You need to make sure that your trust deed is up to date, because there's some quite significant changes there. Second area with board role is planning. And of course, for the board, it's really big picture planning or strategic planning. And that can simply be defined as mainly about how we would like the organization to look overall, broadly what it does, and how it will change over the longer term. The planning that happens via the staff, the managers and so on, is called operational planning. And that's obviously something different. And it's not really what the board should be getting involved with. A critical area that the board is involved with is oversight. And if we go back to the ship analogy, oversight is checking in regularly that the ship is in fact going to the correct destination. It is very possible sometimes, I think, for boards to get tripped up by strong staff or people that believe that in fact the organization is about the staff, not about the board. There's quite a lot of people have quite negative attitudes about boards and not-for-profit. And that is something that's really worth spending some time on and working with the staff and getting that relationship right so that the staff do understand that the board does have a critical role and does take the legal responsibility for the organization. So oversight does not mean doing. Doing is mostly operational and is not a function of the board. A common issue is that blurring of roles, and as the staff like to call it, meddling. It is a two-way problem though in practice. Managers sometimes ask the board for assistance and then resent it when you actually offer some, if they don't like what you offer. Or some managers try to steer the board in a direction that they think the board should be going in. So that's certainly something that needs to be worked on and something that boards need to clarify with their staff. It may make total sense to give a job to a relative or a board member because you trust them and you know that they will do a great job. However, there is a problem of perception because remember, if we saw a developing country do just that, we would call it nepotism or we'd call it corruption. And yet it's very easy to do that ourselves. And I think that is something you got to watch. And the solution is do it if you need to, absolutely, but do have good policy and always follow the process that you've set up. As a manager's employer, oversight also covers all aspects of the employment relationship with your senior staff member. So I would actually say there's a checklist for board oversight. Basically, the following needs to be done. Good planning based on sound policies, accurate information that's not overly detailed. And it's always worth remembering that long reports actually just don't get read. Nobody reads them. I see that so often. People put them aside. If it's an email, you say, I'll get back to it later. You don't read it. If it's one page, you read it. Being timely, i.e. early enough to do something about a problem. And a good example there is the budget. It's a very good practice after 6 months in a financial year to have a look at the budget. How are we doing? Are there things that are unrealistic in that budget? Do we need to change things? That's good practice. Asking the right questions, zeroing in on critical exceptions and problems, reaching consensus, and then dealing with issues. Those are things that really make good board oversight happen. Just before leaving this section, just want to talk a little bit about a couple of other things that I think boards need to concentrate a lot on. One of them is upskilling board members. And yes, that's the sort of thing we're trying to do right now. I think you definitely should have a treasurer role. Some organizations are seeming to move towards not doing this. It's really important to have a treasurer role, I think. And in fact, some funders like lotteries and COGS and so on, in fact, their small print says that the organization they give money to must have a treasurer. So that's something a lot of people might not have noticed. Third thing, think about succession planning. And fourthly, work towards diversity. And I mean, diversity is bandied around a lot, but for me, the word refers to any of a variety of characteristics, including gender, beliefs, culture, background, age, interests, abilities, and so on. And I think a board needs to be diverse in terms of a lot of those things, and that's really helps build a strong board. Now, I was just at this point actually going through reasonably quickly compared to what I was thinking it would take. So are there any burning questions before we move on to the dreaded finance section? No.
I don't see anyone, Tam, but I did just think just to get everyone thinking a little bit, we could put out there's a couple of questions we've put together. It's just a check-in. There's certainly no judgment, but I might just put those out as a bit of a poll to get everybody having a little bit of a think about what they do their end. While everyone is thinking about that, there is one question in the chat. Tam, what would be your 3 top legal responsibilities?
3 top legal responsibilities. Sorry, you have caught me a little flat-footed on that one. Well, firstly, absolutely compliance. There's a number of compliance issues, and that pretty much actually covers all of them. But to drill down and be more specific, the second thing one has to be very, very careful of is satisfying all the legal requirements that the charity services put. And certainly, thirdly, we do have to make quite sure that. Yeah, I'm just thinking like the IRD is not such a critical issue for not-for-profits in that we don't pay tax. And so therefore they tend not to look at us as carefully as they do to commercial entities. I'm not quite sure what I would actually put in as the third most critical legal requirement. I can certainly give that some thought, and I will get back to whoever asked that question. So I'm sorry, that's not one I've been asked before. So that may not be the best answer that you're ever going to get. Are you wanting people to fill in the poll now like sort of a 2 or 3 minute break from my monotonous voice, perhaps?
No, that's right. We've had 50% participate. So feel free. If you keep going, Tam. Okay. And I think if anyone hasn't submitted their answers, that would be great. But yeah, interesting results, and I'll end that in a few minutes when we have our next break.
I'll just butt in at this point. Can you hear me?
Yes, we can.
I can hear you.
Yeah. Your first question, Georgina, is does your manager or finance staff prepare financial reports for every board meeting? And my answer would be that is no, because me as the treasurer prepares those reports. So then, of course, that's round the wrong way round for the questions thereafter. So that's why I haven't answered yet.
Okay.
So I'm not answering because of that. Is that okay?
I think that's fine. What I might do is actually invite Tam just to have a bit of a
comment on that.
Maybe a comment on that. That's right, because I think there are for some boards it is the staff, and for some boards sometimes it's the treasurer. But Tam, what would your comments be on that?
The one thing that's really, really clear is that you cannot be the treasurer cannot do the finances and provide oversight. And of course, providing oversight is one of the key requirements for a treasurer. So you do need to think of a way around that. But I mean, obviously, otherwise the person, it's effectively like saying, I'm going to rate myself, which you really can't do. The whole point of the oversight is that it must be independent. I would think that the best bet, I mean, I don't think that's ruled out for a small organization, but the best bet would certainly be that you would need some independent person with some financial knowledge ratifying essentially what's happened. You can't have the treasurer doing that. That's sort of got to be something that particular organization must take into account. And I think that's something that if you, for example, present it to charity services, they would be very firm about. They would take the line that I'm taking here. They would not say, oh no, look, don't worry, it's small, it's fine. I suspect that that is the situation that you left.
No, it's not. It's big. And the manager and the staff do all of the finances, but I prepare the reports. That's all I'm saying. Pulled from their information. So my report is
I misunderstood you. You prepare the reports based on the work that the staff and so on have done.
Absolutely.
No, that's quite, yeah, that's quite different. I apologize for misinterpreting.
Yeah, that. You're getting me worried. I was running out of here pretty smart.
So Tam, do you think, is that still the right way around? Is it, because I've seen boards do both, do you think it's still a good idea for the manager to do the reports, or what have you seen? Is it just a matter of practicality, or do you think one is a preference?
Most situations, the simple reality is that the finances are an operational issue. So the operational issue falls with staff. So staff tend to do it, and the board provides oversight. And one of the fundamental roles of a treasurer is to provide that oversight. Yeah. So I mean, it's to be absolutely blunt and frank, it would not be my preferred method of doing it. I mean, I think that the organization in question might well have specific reasons for that. But I think if you're going to do that, you've got to have policy and process in place, in writing, and very clear about the distinction, the differentiation, and the controls that are in place. And if an auditor has not picked this up prior, then I would change auditor, to be frank, unless there are those controls in place, because the simple reality is audits are not something to be feared. Audits are something that are there for for our own good. And I would really have a problem if I had, prepared finances for an organization that, that did not satisfy a good auditor. That's the thing. I do think that the standard of audits vary unbelievably, and it's not related to price. It seems to be related to something more random than that. Yeah.
Okay, so I think that's very helpful. What I've done is I have shared the results. Can you give me a thumbs up if you can see the results on your screen?
Yeah, I can.
Yeah, great. Interesting. So maybe if you want to keep going, Tam, and perhaps if we have some time, we could talk about some of those results.
Yeah, okay. Okay, so the thing about not-for-profit finances is that they are different. They're different in a couple of ways that affect us directly, and both of these ways relate to funding. As taught, accounting is designed squarely for people involved in the for-profit, i.e. the commercial sector. And part of the training is often that you should follow rules without question. Particularly auditors tend to be trained in that way. And you can sort of understand why they would be trained in that way. However, not surprisingly, many of those people do not realize that not-for-profits actually need to be different and are different. So two key areas are tagged income and fixed assets. And I'm going to go through those now, in turn. Tagged income is funding that's provided with conditions. These conditions might be based on purpose or on time. So, I mean, it could be that you get operational funding for the next 12 months, in which case you'd want to allocate a 12th of that to each month. That's what I mean by time. A commercial accountant will say that a grant must be taken into income when received. But what if the grant conditions can only be met in a future financial period? An organization can end up with a huge surplus one year if they take a big grant into income. And then next year, when they've got to do the project or whatever it was for, they end up with a big loss. And that is not only confusing, But it's quite problematic often with other funders because they look at that and say, oh, you made a huge amount last year. We don't have to give you any more money. So the solution is to match funding to the satisfaction of the conditions when funding is conditional. And how? Well, it's to do not take the tagged funds into income until the conditions have been met. That's the basic, simple thing. Do not take the tagged funds into income until the conditions have been met. It's actually quite simple to do. The tagged funds, of course, are banked as usual, but in the books and the accounts, you have a liability account where the money is held until it is spent. So anytime any tagged funding is spent that relates towards satisfying those conditions, the same amount is moved from the liability account into income. So the expense and the income will be exactly the same at the end of that month, because usually you do it monthly. This continues until the whole liability has been used up. Or if there's any left over, you've got two options. You can take it as a surplus, which is great, and some funders are happy for you to do that, or you return it to the funder. Now, that all hinges around an actual or an ethical need to return. Now, the reason why I say ethical is because some funding does not specifically in writing say that you've got to return it if you don't satisfy the conditions that they gave it to you for. Quite a lot of funding does do that now. Most funders, in fact, now include a requirement to return the funding if their conditions are not met. So that's quite an important thing. And what I normally recommend is that boards actually pass a resolution around the ethical return of funding if they don't satisfy the reasons for which was given to them. And I mean, I think that that's only fair, because if somebody gives you money to do something and you don't do that, you should really give it back. So that's why I suggest that and in fact, it's very, very, very seldom that the money does need to be returned. But it is quite good practice to do something like that. The other thing I mentioned earlier is when funding is provided for covering costs within a time period. And a good example is if your city council or town council or whatever gives you money for a 12-month period, it's crazy to take it into the first month and make a huge profit in month one and then make losses in all the subsequent months. So again, the standard practice would be to move a 1/12 of it into income each month and keep the other aside until you've done that. Now, that might not sound like it's all that necessary, but if your financial year is out of sync with that of the money of the organization that provided the money, it can actually make a huge difference, because you can end a financial year and still have a grant in advance from that organization that you're holding and it hasn't been put into income yet. That's, for some organizations who get a big grant for operations, that's really important to do that. And just to make a note, this way of thinking is absolutely not okay for a commercial entity, because it would allow them to manipulate tax. And that's the reason why it's not okay. But of course, we do not pay tax as not-for-profits. So this does not concern the IRD in the same way. And that's something that a lot of people don't seem to think about. Okay, the second, are there any questions on that grant advance thing? Because that's a really important part of not-for-profit finances. And it's one of those things where if you got it, you say, oh, that's easy, I understand that completely. But many people actually take a little while to click and say, oh yeah, okay, I get that. So are people okay with that? We can move on to the next one. Yep, all right. The second thing that is generally not thought about is fixed assets. Now, a commercial entity needing a new roof, for example, either uses reserves or borrows money to buy the new roof, pay for the new roof. However, what do? We ask a funder for the money. So it's not the same thing at all. The whole point of depreciation is to spread the cost of a fixed asset so that when the existing asset is no longer usable, we have basically collected enough funds to buy a new one. Well, in our case, we reach the stage where we're ready for the new one and we ask someone else for the money and they give it to us. So we are left with a whole bunch of money set aside. Now that's actually quite a good thing in a way, because it is in fact the way most not-for-profits build up reserves. For many not-for-profits, it's the only way they can build up reserves, because very few organizations or very few funders are happy to give you money to build, well, none of them that I know will give you money to build reserves, and very few will give you money for operational costs, actually. So it's quite hard to do that. And this has been something that's worked well for quite a few organizations that have been around for many years. The snag for not-for-profits with this whole fixed asset thing is that if, for example, you were given $50,000 to buy a van, a truck, that goes into income. It has to. And you can only claim depreciation of the van as an expense. So that year, you're going to make this fat profit again, this fat surplus. And then the next few years, you've got to take that depreciation off. So it's harder to make a surplus on those years. So that's something that's quite tricky. So what can we actually do about it? Well, there are two things that you can consider. One of them is, if what would normally be a fixed asset is fully funded as part of a project, you can ask yourself, is it necessary to be called a fixed asset in your accounts, or can it be part of that project? So for example, an organization I worked with did a kitchen upgrade. Technically, they should have put a whole lot of stuff in as a fixed asset and had that issue of making a huge amount of money the year they were given the money, and all the subsequent years would have lost out. But what they did is they put it in the books as a project, kitchen project, money in, money out, and they didn't actually show it as a fixed asset. Probably fair enough, because they don't own that building. So if they leave, they couldn't take the kitchen out with them anyway. So I don't think anybody would really argue with that too much. The second option is, the second point I was going to make is that thing about the building up reserves, which I had already mentioned. Because funders won't fund operating expenses, you use your fixed assets as a way of building up general reserves. And of course, general reserves are a good thing for an organization to have, because as we've all seen with COVID, that rainy day does sometimes come. And the funny thing is that the rainy day comes and half the organizations I know of don't want to spend their reserves, even though that's what they actually kept them there for. It is quite a strange one. So I mean, I think it is important that boards are careful with reserves, but when you have to spend them, you have to spend them. So what I'm going to do now is to share a board report that I made up for this session. So this is completely fictional. And also I haven't gone through in detail, so please don't somebody say to me, that doesn't quite add up with that, or that's a bit high for maintenance or something. It's not meant to be perfect. But what I'm wanting to do with it is actually for you to have a look at it at the same time as I do. And I'm going to say, if I were on your board and these reports came to me, what are the sort of things that I would look for? What are the sort of things that I would question on this report? And the idea is to try and do them, try and highlight some colored points on the report, and then talk about it. Okay, so I'm going to try and share my screen with you. And please let me know if something pops up.
Yes, we can see that.
Okay, you've got that. So this, what I've done it is as a single file, and I'm going to page through it and just talk about it a bit. So the first bit here is actually about a balance sheet, more commonly now known as a statement of financial position. That's the same thing, okay? So let's just talk a little bit about it before going down and looking at those colored things and what they mean. A balance sheet is a snapshot of an organization's financial position at a particular moment in time. Now that compares to a profit and loss statement, which is also nowadays more accurately called a statement of financial performance. That is a statement of financial performance, or profit and loss, is a record of how the organization performed over a chosen period of time. So we've got the snapshot versus the performance over a period of time. So why do we need a balance sheet? Well, this type of report gives us a health check of an organization at the balance date, and usually compares it with a previous date. And usually that is going to be a year ago. So in this one, I've simply called it this year and last year, but at the top you will see there is a balance date, which is the 31st of March, 2022. Okay. So we all as a board receive this thing and we start looking at it. The first thing you'll notice, which we'll come down to and be able to check later, is that last year we made a surplus, and that maybe that's because COVID didn't hit us quite so much, or we got more support. And this year it looks like we are going to make, so far we're making a loss of 12,560. It's the second line from the top. Okay, but let's go to the colored things. The first yellow one, which is 131,613. I look at this and I look at last year and say, hang on, why is the daily account so much more than it was last year, and the saver and term deposit account so much less? It's pretty easy guess that a term deposit has been cashed in or terminated, but it looks like the finance people haven't done anything about it, and they've just left it in the daily account, which won't be earning any interest. So I would look at that now and ask them, are you doing something about that? Okay, so just by the way, before actually dealing with this, I just do want to talk about a couple of the jargon things relating to a balance sheet, just so that we know what these different things are. First of all, a balance sheet must have two figures that agree exactly with each other. They must balance. So they must be the same. And what's often not said, they must be positive. If they're not positive, essentially your organization is bankrupt. So, you know, you can't really operate. So they will be positive, hopefully in all cases, and they must agree with each other. The second thing is, people will often say, what exactly is equity? What do you mean by equity? That's that right up near the top, that heading there. And then we got retained equity, and then the surplus and so on. Equity is really about ownership. That's what there is to own in this organization. That's the amount of that the organization is worth effectively. And of course, that leads us to assets, which is anything that you own. And there we're talking about current assets. And I didn't include long-term assets and all sorts of other things because that's not common for not-for-profit. Against assets is liabilities, which is anything we owe. Current relates to the short term, generally a year at the most, versus non-current, which is longer. So things like fixed assets are, which we'll go down to, or I'll go down temporarily to them, non-current assets, which is fixed assets there. I'm going back up to the top, okay? So fixed assets are non-current assets, and that basically because they're not the same as cash. If you got to pay somebody, you can't say, well, hold on a sec, I've got this desk, let me just sell it quickly. It just doesn't work like that. Okay, the next quite important thing is working capital, and I'll go down so that you can see that. It's this here. Now, working capital is essentially the funds that are available to pay off debts as they arrive. So you really want that to be positive. If that is not positive, you've definitely got a cash flow issue, and the finance person is going to be hopefully beating on the door and talking about that. Then we've got this thing here in the green, grants in advance, and we've talked about there. That's the tagged funds. So those are the ones that have got a requirement to return if they are not used. So that, if you notice, comes under liabilities. So that is not yet taken into income. So at the moment, there's 56,841, where if you can see my mouse pointer, which has not been taken into income. It's waiting for projects that haven't happened yet or haven't completed. All right, so let's have a look at what are we going to look for in this thing. The first thing I look for is, has anything changed a lot? And I've highlighted a few things that have changed a lot. I've already talked to you about the daily account, the bank balance, and it's been explained to us, and we're happy with that argument, but we've said to the finance person, we definitely want you to either get another term deposit or get a higher interest-bearing account. The second one is holiday pay provision, which is the second yellow one in possibly the middle of your screen. And we say, why has that gone up so much? So that's something we might want to look at. And the argument would probably be, well, during the COVID period, nobody took leave, and this is mounted up, and so on. So as the board, we might want to say, well, we would like the manager to try and bring that figure down if possible, encourage people do need to take some leave and so on. The third figure is possibly, all right, hopefully will be visible now under the non-current assets. We see, oh, plant and equipment has jumped up, whereas the others have all gone down. Not all gone down, but it's jumped up. Did the manager buy something without telling us? There's like $10,000 added there. Do we as a board know about this? And maybe the manager reminds us that we authorized a new something or other. But it's certainly something that I would want to check. Okay, so those are the things that I would be looking for here. I would also want to say, are there any things that I don't understand? And I might say this orange figure here, hang on a sec, we seem to have had a creditor accrual last year and a similar one this year. What is that for? And so the answer might come, well, we accrue the likely audit cost. So that is for audit fees that's kept. So we might say, yep, fair enough, we're quite happy with that. And then the third thing I would look for is, have critical things been included? For example, the ones in green, holiday pay provision, that should be entered every single month. It's really important because that can mount up hugely and affect things a lot. So you need to have that reconciled every month. And then, of course, the other one in green, the grants in advance held, that needs to be accurate. And further down here, we're going to talk about a grant in advance report, which I do suggest that you have. All right, so that's basically the balance sheet or statement of financial performance, position, I mean, sorry. Does anybody have any queries or comments about that? I'll take that silence as being everybody's either bored to death or else they're happy with it. So let's move on. So the next thing is the profit and loss statement, otherwise known as statement of performance. So as said before, it gives you the performance of your organization over a period of time. Now, this is quite an array that's been given to you here, but some boards do want this. So let's take a look at things. And in fact, okay, I'll just talk about the main terms first. YTD, in case you don't know, stands for year to date. Not enough space to type that in. Budget, which is referred to here, is the operating budget. And that one of the roles of the board is to approve a budget, operating budget every year. And that's quite a key thing for the board to do. Then we've got a question of what some people find strange. It's got income here, and then activity expenses in green, and then operating expenses. So some people say, what the hell is that? Why have you got that? Well, for a very important reason. Operating costs, the ones down below, those are used to be called overheads, effectively. Those are expenses that are needed just to keep the organization doors open. And they would largely continue if all projects and activities stopped. So that's critical to know what is actually one of those expenses. On the other hand, we've got activity or project costs, which are those that go towards what I call doing the good stuff, which, in other words, what the organization was set up to do. So those are these ones here. Okay, just before we look at those in a little bit more detail, one thing you'll notice in the orange, new projects, and both under income and under activity expenses. Even though some people say, well, what's the point? You've got exactly the same amount as income and as an activity expense. Why do you have them there? Well, they are quite useful as an aspirational sort of guideline. They remind you that you need new projects. They remind you to think about new things. And as long as they are the same, the income and the expenses, if you don't do a new project, it doesn't matter. It doesn't affect the bottom line. The problem is some organizations, they say, we've got this new idea. It's going to make $50,000. They put that under income, and it's only going to cost $1,000. They put that under expenses. So you've got this highly speculative thing that is adding $49,000 to your bottom line. That's a very, very dangerous thing to do. I would always advocate, even if you're really convinced it's going to make a good profit or good surplus, keep the figures relatively similar. One other thing, I'm just going to temporarily go down to the bottom. So there's some further things here which are called other income. Oh, it's on the previous page there, and other expenses. Now, these are things that don't relate to operations at all. So interest received is not relating to your operations. COVID-19 assistance is not relating to your operations. Same with COVID-19 specific costs. So, you know, a lot of organizations are doing things like RATS tests and masks and so on, and putting that under this other expenses because it really doesn't do anything towards their vision and mission. It's a separate expense. And of course, depreciation is not, it's a book expense, as we've discussed. Okay, I'm going to go back up again to the beginning of this. All right, so what are we going to look for with a profit and loss? The first thing, of course, the critical thing you as the board member want to look at is, oh, I do have to go down again, the bottom line, this famous bottom line here, and I've highlighted those in red. So this year, we are minus 12,559, and we had a pretty bad month. Now, that doesn't mean much to us unless we know what the year-to-date budget is. Now, we see that should have been $995. So we know that we are 13,500 worse off than we were expecting to be when we did the budget. So that looks like we're going to need to do something, okay? The second thing to do is to have a look at, is there anything odd or that has changed a lot? And my eyes would immediately be drawn towards repairs and maintenance, this yellow thing here. I say, whoa, look at the budget. The year to date, 2,700, we've spent over 6,000. What's going on? So we would want an explanation to the board for that. The next thing just to note, a couple of things, and I'm going to go up again a little, is these things on the right here, the ones in blue, one-off expenses. It's quite useful to see whether those have been incurred or not. So the audit, for example, we can see it hasn't been paid, and we know that roughly 2,750 has got to be paid in the near future. So that's an interesting one. Those would not be spread over the months. The things in green are just to highlight if there are new expenses that we're expecting in the year. And this particular organization decided that health and safety is quite an issue, and they decided to put in a separate code for health and safety and give it its own budget. And the same thing with marketing and communications. They decided that social media is something, remember it's a fictitious company. Social media is something they're going to spend some money on. So that's why they put a budget in. Okay. So those are the things with the profit and loss. Now let's just go down a little bit further and we'll look at, sorry, that probably very annoying the way I moved those. Payables and receivables, so debtors and creditors.
Sorry,
and
Tim.
again, it's relatively unlikely that a board member would be too fussed about these. But if you were going to, you'd sort of look at this yellow one here and say, what's that about? Oh, please sort that out. It's a disputed call out, yeah, but let's resolve it. Then this further down, this advance payment, you would say to them, well, what's the story with that? They tell you. And then you'd look at these older ones. Ooh, those could be really old. What are you doing? Are you going to write them off? Are you following it? What are you doing about them? So you would just want a little bit of a report back on those exceptions. Okay, and then finally, this is something that was completely invented by me, I guess, is a grants and advance reconciliation report, which I give to any organization that I'm involved with. And essentially here, let's just have a little bit of a look at this. First of all, it must agree with the balance sheet. So if we went back to that balance sheet, you'd see that this figure here, 56,841, that I'm circling with the mouse pointer, that does indeed agree with the balance sheet. That is the current total grants in advance that we've got. And then if you just take a general look at it, let's look at the headings. Source of funding, self-explanatory. What's the project? Self-explanatory. We're definitely going to deal with those weeds, I can see. And then what was the balance brought forward at the end of last year? And that, of course, would be your audited figure that comes from last year. What did you receive new this year for each of these? What have you used in previous months and what have you used this month? So essentially, you've got a very good grasp of, we've got the money, we've kept the money, you know which projects are complete, you can see which ones have got nothing left over, they're complete, you can see what there is left. And sometimes you need to chase people, oh, look at that, 14,000, you better spend that before we lose that sort of thing. And the final thing, and basically the final thing that I'm going to bore you with tonight is down below, this is that policy that I talked to you about. This organization, this fictitious one, has got this policy about how they will treat grants in advance. And then they actually stipulate further the criteria they will actually use in order to determine whether something is tagged funding or not, whether it's a grant in advance. I think that that's pretty much 1 minute to go, pretty much what I wanted to cover. But I would very much encourage you to request any of the numerous resources that are available to you and just see if they help you in any way. Yep. I'm going to hand over back to you, Georgina, unless there are any questions from anybody. Did you want to have a quick look at those questions, the summary? I've actually done
there is, sorry, Tam, if you can you hear me?
Yep.
Great. There was one question, and it's a good question. So a lot of our hubs do umbrella other organisations.
Yes.
So the question is, would you put them in the grants held in advance on the balance sheet, given that since you're the one holding the grant money, you're holding in advance just as you would for one of your own grants? Or I think it's the or would you put them into the project expenses section?
No,
Or would
I'll
you
show you. I'll show you. I'm going to go back to that. Just go back to the, sorry, flicking you back to this, and I will show you exactly where you put that. So I'm going up to the balance sheet. Okay. Now there's not much here, but notice this. For me, it's in the middle of my screen. I don't know if it is for you, where the mouse point is. Funds held on behalf of others. That is what you do there. Right. And just remember to be careful with dealing with GST with that. It's not your issue there, GST. So effectively, that is a current liability account you set up because they can ask you for the money at any time. It is in your bank account, but you are holding it. And this could be $30,000 or whatever. But it's really important that you don't get involved with this, because if you put it under expenses, if your organization is on the cusp of moving into the next tier, for example, for charity services, holding money for someone else could push you into that requirement of going to a more stringent tier when you don't actually belong there. If you see what I'm saying, that's one of the disadvantages, and it just isn't one of your expenses. It is exactly as shown here. It's funds held on behalf of others. So that's why I kept that little thing. I know 267 is a bit pathetic, but it's a small organization, that one must be. Yeah. So does that answer the question?
Yeah, I think that's really helpful. Leave now.
Half of it, sorry. The other half was for the profit and loss statement. Does it go under like a project expense, or do you have a separate section for it that's called umbrella grants? Because it's not your expense, but you have money.
It's not part of the
it's not part of it
at all. It doesn't appear in the profit and loss. It is only a balance sheet entry. So there's two again. All right, look, I'm going to go back to sharing that screen, and I will show you where that money is held. It's held in two places. It's in your bank account. So at the moment, it's let's say it's 10,000, or let's just take this actual silly figure of 267. 267 is part of this yellow 131,613. That's the one side of the entry. The other side is here, down below, funds held on behalf of others. And that can be any amount. It does not, absolutely not appear in the profit and loss in any way. No. Yeah, that would be a
thank you.
grave error to do that. Yeah. Okay.
I think that's really helpful, Tam. Quite a few of our hubs do offer that service to smaller community groups, which is fantastic, but it's great to know how to deal with it in the.
I think that's brilliant. And I will suggest one thing that is not, I didn't know that. So this is not in that resources offered. I do have a template that I produce that numbers of organizations use that covers that money and details things like how it will be kept, the fact that the organization you're holding it for will not receive interest, because I've had that an organization suddenly come back and say, well, hold on, where's our interest on this? Now you're doing the work for free for them, and probably because you're holding in a cash account, you're not making much interest. So the generally accepted thing is that if there's a few dollars of interest, you as the holding organization would just take that. It would be really hard to separate out their interest unless you had a separate bank account. And then it also deals with things like GST and points out and also very clearly points out that you will not be responsible if they try to spend more money than you're holding for them, that you will limit payments on their behalf to what you're holding. So those are the issues that are covered in this template. It's a one-page. I would highly recommend you sign one with anybody if you're holding money on their behalf.
Brilliant.
And I can give you that. Just ask me for it. Yeah.
That sounds
another
like
quick question. The holiday pay reserve, which is in the balance sheet.
Yeah.
And zero is back to calling these things balance sheets and profit and loss after having years of position and performance. What are you doing with the other side? Just grouping it into wages or showing a holiday pay line separately?
No. Keep it as simple as possible. So, for example, what I highly recommend is, I see some organizations that when dealing with the IRD have a PAYE, a student loan, a Kiwis, all different accounts. No, I don't think you should do that. Just have one called IRD deductions. And then you use the memo in your Xero or MYOB, whichever you use, column just to say PAYE, Kiwis or whatever. So you can sort it if you want to.
I'm just talking holiday pay. Because only holiday pay, because I'm going to have to introduce it as a provision, so I need a debit. So is the debit just being grouped with wages? Okay, that's all I need to know. Thank you.
Yeah, so it's just goes into wages, and that's exactly the only time that it's tricky where you got to think about it is, let's say you'd employed somebody for a specific project. Then you've got to make sure that the other side of that entry goes against that project rather than general wages, because otherwise your funding is going to be wrong.
We divide between wages and the admin. That's not a problem. But I just didn't know whether it went in as a separate line.
No, absolutely, that's it. Yeah, as I say, I always keep one IRD account. That's it. And
holiday pay is not an IRD account.
No. Yeah.
Are there any other questions for Tam? I don't see any, but I'll give you a chance to take yourself off mute if you do. Okay. All right. There's no other questions in the chat, Tam.
Okay. Can I just remind everybody, if you have any questions, you will have my email address in that other paper. Just flick me one, but remember to say whether you want a personal reply or whether you want it to be a group reply, because if it's a group reply, I'll pass it on to Georgina and she can send it round. If it's a personal reply just relating to your organization, absolutely fine.
Okay, I think we'll close it there. It's interesting, there was just a comment in the chat about covering individual project costs in Xero. We did a Zoom call on that today, so perhaps we can talk about that some other time. It might be that Michelle and I look at particular topics that you might be interested in, and we run other little workshops online, especially if you found this one interesting. So I'm just going to say a massive thank you, Tam. I think that was really great. And while you were talking, you missed some comments in the chat saying how valuable this would have been for somebody earlier on, and how valuable it will be for new board members. So we'll be passing the recording on. So and there's lots of other thank yous coming in on the chat as well.
Well, thank you to people for those comments. I do appreciate that.
Yeah, hugely beneficial, because it's one thing to put yourself forward as a volunteer on a board, but it's another thing to sometimes amass some of the experience and skills and knowledge that you need to actually do your job well and look after your organisation. So really appreciate your time tonight, Tam, and I will close out with a karakia and wish everyone good night. So thank you everyone else for coming as well. So the English version of this is: restrictions are moved aside, so the pathways are clear to return to everyday activities. Kia whakaaria te tapu, kia wā te ai te ara, kia turiki whakataha ai, kia turiki whakataha ai, haumia, huia, taekia. Thank you so much, everybody. Enjoy the rest of your night, and thank you all for your time. Ka kite.
Okay, bye.